Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings. Today we're diving into WaFd Incorporated's latest report, and let's just say it involves a bit of regulatory good news and a peek at their stock situation. Don't forget, if you like what we do, hit that subscribe button and join our Discord community, linked in the description below for more exclusive content and discussions. Alright, so the big news here is a regulatory update. On the 19th of September 2025, WaFd Incorporated, through its subsidiary Washington Federal Bank, DBA WaFd Bank, received notice from the Consumer Financial Protection Bureau, or CFPB. What this basically means is that two old agreements, specifically the 9th of October 2013 and the 27th of October 2020 consent orders, which were about the bank's Home Mortgage Disclosure Act program, have been terminated. This is effective the 18th of September 2025. Think of these as past agreements the bank had to follow. Having them terminated is generally a positive sign, suggesting the issues they addressed have been resolved to the CFPB's satisfaction. It can mean less oversight and fewer restrictions, which is usually good for business. Now, let's look at how WaFd is structured in terms of its ownership and trading. You can see here that they have common stock with a par value of $1 per share, trading under the ticker symbol WaFd on the Nasdaq stock market. They also have a preferred stock offering. This is in depositary shares, where each share represents a small piece, specifically a 1/40th interest, in their series of preferred stock. This preferred stock has a fixed rate of 4.875%. It is also non-cumulative, which means if a dividend is missed, it doesn't have to be paid later. This preferred stock also trades on the Nasdaq under the ticker WAFDP. Having both common and preferred stock gives investors different ways to invest in the company, each with its own risk and reward profile. As with pretty much all corporate filings, there is a section for cautionary statements. They're telling us that some of the statements in this report are what they call forward-looking. This means they are based on the company's current beliefs and assumptions about the future. However, they also warn that real-world results could be very different from these predictions. They mention risks and uncertainties that could cause actual outcomes to vary significantly. For the specifics on these risks, they point us to their annual report, which is a good reminder that these reports are just a snapshot, and there is a lot more detail to be found if you want to dig deeper. They basically say that things might not turn out as they expect, and that is a pretty standard but important disclaimer. And finally, to wrap things up, the report is signed by Kelly J. Holmes, who holds the title of Executive Vice President and Chief Financial Officer. This is standard procedure, confirming the accuracy of the report from a senior executive level. Now, looking at this filing from a broader perspective, the main takeaway is the regulatory win, with the CFPB effectively closing out those old consent orders. This is a positive signal for IFD Bank, indicating a clean slate in that particular area. When we look at their stock structure, it is pretty typical for a publicly traded company, offering both common and preferred shares to a wider investment base. While this report doesn't contain detailed financial tables, the underlying regulatory news is what sets the tone. From a Warren Buffett-style view, you'd want to see what this means for their operational efficiency and how it might free up resources. Without the numbers, it is hard to say much about their financial health, but a clean regulatory slate is a good foundation. The key risk here, as they themselves point out, lies in those forward-looking statements and the broader market conditions that could impact their performance. For now, the termination of these consent orders is a clear positive, suggesting improved operational freedom for the bank. Alright, that is our quick decode of the latest from WaFd Incorporated. What is your take on this regulatory development? Does it change your view of the bank? Drop your thoughts in the comments below. If you found this breakdown helpful, please give it a like and subscribe for more corporate insights. And absolutely check out our Discord in the description for live discussions and more. Thanks for watching, and we'll see you in the next decode.